Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to describe about Bank of India's term deposit premature withdrawal penalty rules. Important points every depositor should know. Introductions. Term deposits are a popular investment option for customers who want to keep their money safely with a bank while earning interest for a predetermined period. However, situations may arise when a depositor needs to withdraw the deposit before its maturity. In such cases, the applicable rules regarding premature withdrawal and penalty become very important. As per the Bank of India information provided, different conditions apply to domestic NRO and NRE rupee term deposits, depending on the deposit amount and the period for which the deposit has remained with the bank. Domestic and NRO term deposits. Deposits below 5 lakh. For domestic and NRO term deposits of less than rupees 5 lakh, there is an important distinction based on the period completed by the deposit. If the deposit is withdrawn on or after completion of 12 months, the premature withdrawal penalty is stated to be nil. This means that although the deposit is being withdrawn before its original maturity date, no penalty is applicable under the stated rule when the deposit has completed at least 12 months with the bank. Domestic and NRO deposits below rupees 5 lakh. Withdrawal before 12 months. If a domestic or NRO term deposit of less than 5 lakh is withdrawn prematurely before completion of 12 months, a penalty of 0.50% is applicable as per the information provided. Therefore, depositors considering an early withdrawal should first check whether their deposit has already completed 12 months because the applicable penalty can differ depending on this period. Domestic and NRO term deposits of rupees 5 lakh and above. For domestic and NRO term deposits of rupees 5 lakh and above, the stated rule provides for a 1% penalty when the deposit is withdrawn prematurely. Therefore, customers with larger value term deposits should carefully consider the financial impact before breaking their deposit before maturity. The effective interest payable after premature withdrawal may also depend upon the bank's applicable rules for recalculations of interest. NRE rupee term deposits withdrawal before 12 months. The rules for NRE term deposits are different from those applicable to domestic and NRO deposits. As per the information provided, no interest is payable on an NRE term deposits if it remains with the bank for less than 12 months. Consequently, there is no separate penalty because the deposit does not qualify for interest when withdrawn before completing the stipulated 12-month period. NRE term deposits below rupees 5 lakh. For NRE term deposits of less than rupees 5 lakh that have remained with the bank for 12 months or more, the stated premature withdrawal penalty is nil. Thus, if such a deposit is withdrawn before its original maturity but after completing at least 12 months, no premature withdrawal penalty is applicable under the information provided. NRE term deposits of rupees 5 lakh and above. For NRE term deposits of rupees 5 lakh and above, a 1% penalty is stated to apply when the deposit is withdrawn prematurely after completion of 12 months. Hence, NRE depositors with higher value deposits should particularly check the applicable penalty before deciding to close the deposit before its scheduled maturity. Quick understanding of the rules. In simple terms, the rules can be understood as follows. For domestic and NRO deposits below rupees 5 lakh, the stated penalty is nil after 12 months and 0.50% before 12 months. For domestic and NRO deposits of rupees 5 lakh and above, the stated premature withdrawal penalty is 1%. For NRE deposits, no interest payable if the deposit remains with the bank for less than 12 months. For NRE deposits below rupees 5 lakh that have completed 12 months, the stated penalty is nil. While the NRE deposits of rupees 5 lakh and above, a 1% penalty applies to premature withdrawal after completion of 12 months. Why depositors should check before breaking a term deposit. A premature withdrawal decision should not be taken only by looking at the penalty percentage. The depositor should also consider the interest already earned, the revised interest rate applicable on premature closure, the remaining maturity period, and the alternative investment or financial requirement for which the money is being withdrawn. In some cases, keeping the deposit until maturity may be financially more beneficial than closing it prematurely. Conclusions. Bank customers should carefully understand the premature withdrawal conditions applicable to their particular term deposit before requesting premature closure. The deposit type, domestic, NRO or NRE, along with the deposit amount and the period completed can significantly affect the applicable penalty and interest entitlement. Therefore, before breaking a term deposit, customers should verify the latest applicable Bank of India rules, the specific terms mentioned in their deposit advice, and the actual amount payable on premature closure. Disclaimer. This information has been prepared for general awareness and educational purposes based on the Bank of India term deposit penalty information provided. Rules, rates, conditions, and interest calculations procedures may be revised by the bank from time to time. The actual amount payable on premature withdrawal may depend on the specific deposit terms and applicable rules on the date of closure. Customers are advised to verify the latest applicable terms with Bank of India or through the bank's official channels before taking any financial decision. Thank you very much for your patience. Request for like, subscribe and share.